What's up, guys? It's Cash Flow Cart. Today, we are not going through a stock, we are not going through numbers, and we're not going through an ETF. We are talking about portfolio managing, guys. I will be taking off one position today, and my goal on this channel is to be fully transparent. I really want to not just present myself as a YouTuber or content creator, but first and foremost, an investor, a dividend growth investor who has a passion for this game. And I really do. I've been doing this for quite some time now, since I was probably 16, and now I'm 22. So I guess that's quite some time if you consider it. And today I will be taking off a position and then reallocating those funds into other positions. And I've got the income estimator pulled up right here just so you guys can kind of visualize my thought process. The position I will be taking off is Coca-Cola. That probably sounds like a surprise because you guys know I'm a big fan of drinking Coke. I'm a big fan of the company, their fundamentals, and their economic moat. However, psychologically, right now for me, I can't add to this position. It is my smallest position, and I see better use of the funds and a couple other tickers here. So if you've kept up with the channel, on April 1st, I came out with a video about Pfizer stock and the opportunity there. So make sure to check that out if you haven't. I will be taking off this Coke position today, guys, and reallocating it into Pfizer. And then I will pick up probably one share of T. Rowe Price. And the reason for that is because I haven't been able to build T. Rowe Price out as much as I would have liked. And I don't want it to start kind of running away from me. My initial cost basis on this one is $104, and T. Rowe is at $120. So I see that kind of running, guys. I'm yapping a little bit, but let's get into the trades. And real quick, we will also look at how this affects the estimated annual income. So currently I'm making $2,273.76 in estimated annual income, and that is for the next calendar year. I guess we'll come back to the screen and we'll go from there. So yeah, keep that number in mind. 2273 and change. I'll make a quick note of it just because whenever I'm filming, like my critical thinking is not as high when I'm in front of a camera. I'm sure you guys could relate. All right, let's get into it, guys. We will go to Coke and we will go ahead and look at my position. So my average price on this one is $56.67, guys. I have 7 shares. It's my smallest position, like I mentioned. And I initially wanted to start building it in kind of this dip we saw. If you guys remember, this dip, the catalyst for it was kind of the consumer staples pullback brought on by the weight loss drug, Ozempic. And, it hit a lot of these consumer staples or snacky or junk food names. Although the fundamentals of these companies didn't seem to erode much, it hit Walmart, it hit Coke, it hit Pepsi. We've talked about on the channel, it hit Hershey. And I wanted to build this position out on the dip. However, I was a little late to the trigger, and this was kind of a short-lived dip. Okay? I want to be very clear kind of with my psychology here. I don't have the capital to continue building this position because I'm more interested in other positions right now. So for me, having that one small position kind of at the bottom of my portfolio, it's not something I'm interested in keeping on the table really without knowing when I'll be able to return to it and build it out further. That's kind of my logic. Let me know in the comments, guys, if you're comfortable having, smaller positions in the portfolio that you never get around to building. For me, it's kind of a chore because it's more stocks to keep up with. It spreads out your focus, and I guess you don't want to spread yourself too thin, having too many positions, guys. At that point, it's better to be in kind of this ETF investing game instead. So we will be realizing a gain of $31.64. I'm not too concerned about that. That is going to be a short-term realized gain, and I am using an individual investing account, so I will be taxed on that. It'll probably come out to be like between $6 and $8 of taxes on that gain. Again, I'm not worried about it, guys. This is more of a psychological, here's my process. I wasn't able to build this position out. I'm putting the funds in positions that I do want to build out. Okay. So we'll go ahead and hit flatten, and that'll take my position from long 7 shares. It'll take it flat. It'll close, sell 100% or 7 shares of Coke at market price. And we'll go ahead and do that. Should get filled here in 1 second. Oh my goodness, guys. It's Good Friday. And I'm just realizing that the market is not open. So I'll go ahead and cancel that, guys. But I will go through these trades, and I will continue this video next week when the market is open, guys. I want to be completely transparent on this channel, and I thought it'd be kind of fun to go through kind of a psychological portfolio management type video, guys. So we will pick up where we left off when the market is open, because I do want this to be live. All right, guys. See you and have a good weekend, I guess. Have a great Easter weekend, everyone. What's up, guys? I hope everyone had a happy Easter, or, a hoppy Easter. I practiced that joke all weekend. But anyway, we are back. It is Monday, April 1st. And like I said before, I had started this video on Friday, not realizing the market would be closed. Obviously, it was Good Friday. But we are back, and we're going to place those trades today. We're going to reallocate funds. We're going to spend about $500 today on the channel, give or take. Real fast before we get started. You guys probably can't read that good, but I saw this in the Wall Street Journal today. I picked this up, after my class. Wall Street's Magnificent Seven narrows to become the Fab Four. Guys, this is getting out of hand. This is getting ridiculous. It's the Magnificent Seven now. Quite honestly, I don't keep up with that kind of, trendy stuff. It was FANG, and then it was two A's in FANG. We've talked about it before on this channel. But guys, getting, sort of your stock picks from mainstream media is kind of a losing game. And we can see that right here on the cover of the Wall Street Journal. I mean, they're openly admitting, that these trendy ways of investing, that they simply don't work. So, I just wanted to point that out because we have talked about it before, guys. I want to re-emphasize, you have to focus on your own style of investing. For me, that's dividend growth investing. I know my risk tolerance. I know I'm going to make mistakes along the way, and over the long term, I will be profitable. I will create a growing stream of income. And with that, I will see, appreciation in my portfolio, guys. That's what I focus on. My bag, stocks that are in my wheelhouse. Let's not talk about this all day, but I did want to point that out, guys. So I will go ahead and place these Coke trades. Made that a little too small. So here we have Coca-Cola. We talked about my average price of 56. It's now trading nearly at 61. I will be realizing $30 in short-term profits. That's not a big deal to me. I'll go ahead and hit flatten on this trade. That will sell my 7 shares of Coke. And let's see how much capital roughly that gave me. So we'll take the 60 times 7. That's $420 in capital. Plus, I have some cash in the account already. So today, we're going to go ahead and invest $500, guys. Actually, today at 1:30, April 1st, I had a video on Pfizer come out, kind of a stock analysis, an analysis of how Pfizer has kind of been, undervalued due to some macroeconomic conditions, some negative sentiment. If you guys want to check that out, I'll link it at the end of this video. But today, well, first off, no, we'll start with Pfizer. So how many shares of Pfizer do I want to buy today, guys? It's trading at 27 a share. So I'm going to spend roughly, actually, first off, let's buy T Rowe. I did say I would add 1 share of T Rowe, as this one has started to kind of run away from my cost basis of 104. And, this is still going to be, or this is now my smallest position. So we are going to go ahead and take this to a 12 share position here with T Rowe, guys. You'll bear with me. Okay, I got filled on that T Rowe share at, where did I get filled, guys? 120.42. That's not as attractive as some of these other shares I was picking up. I even picked up 2 shares at $92. But again, I am confident about this one in the long term. I'm happy with the starting yield I'm locking in. And, hopefully I will be able to build out this position a bit more kind of before we see this one confirm a reversal. We'll go back to Pfizer, guys. Like I said, I'm aiming to invest about $500 today, and I just spent $120 on the T Rowe share. So that leaves me with $380. All I'm going to do here is put the rest of it into Pfizer stock. So we'll go 380 divided by 28. And I will be purchasing 13 shares of Pfizer today, guys. This is really exciting for me. I've been trying to build this position out for a while now. From a technical standpoint, I do feel Pfizer kind of could be in the same boat as T Rowe Price in terms of hitting kind of a long-term bottom. And, although this hasn't been a crazy growth stock throughout the years, guys, we can even see from the chart, if you could be opportunistic with this one, there has been periods you could lock in some, really impressive share price appreciation as well as dividend growth. So we will go ahead and put that order in for the 13 shares of Pfizer. We'll go ahead and send that one. Maybe. There we go. That takes me to 192 shares, guys. I am realizing now, I told you guys I'd go back to the income estimator and we could kind of look at, how these moves change my estimated annual income. So we will go ahead and do that. Here it is, TD Ameritrade's income estimator tool, guys. I made note, I remember on Friday, of the total. Oh, here it is. I thought I had lost it. So, guys, here's my estimated annual income, $2,286.98. We'll call it $2,287, basically. As of Friday, that number was, my handwriting's not the best. That number was 2,273, guys. I did add about $70 of capital to the account, as well as take off Coke and reallocate those funds. And, as you can see here, guys, kind of these strategic moves where, you have opportunities you really want to build out. These strategic moves can really boost your estimated annual income. So, you guys are going to learn about this and, kind of figure out what works best for you. I do want to bring up, guys, now, after getting rid of that small position in Coke, I now only have 7 investments. I'd say a lot of investors or other YouTubers might say, that's not diversified enough. Okay, guys, I get it. I'm not in any ETFs. I'm in 7 stocks well, 6 and then a REIT. We'll call it a stock for the video. But here's my take on this, guys. I'm a long-term investor. I'm in this game for a long time, and the positions I'm focused on now, the positions I see opportunity in, right now, today, I'm building out those positions. I'm being opportunistic, but a year from now, 2 years from now, 3 years from now, and so on, as my account grows and as I, build Pfizer into a more sizable position right now, T. Rowe Price, I want to build it more sizable. There's going to be other stocks, okay? There's going to be other stocks that kind of come into my lens. Other stocks I want to build that other positions in, guys. We've already talked about it. I've had a super close eye on Hershey. Hey, Mia. This is my dog, Mia. She got to see her cousins over Easter, so I think she's a little tired today. Anyway, but like I said, in this long-term game, each year and throughout the years, there's going to be other stocks I can add. That was kind of a long-winded way of saying, this 7 investments, that is not capped at 7. Okay, I'm not telling you make 7 investments for the rest of your life. I'm telling you be opportunistic. Be comfortable with taking calculated business risk in this game, guys, and trust that, if there's a stock you're interested in, but the valuation's not looking the most attractive right now, or maybe they're having some headwinds right now, there's going to be opportunities when that stock becomes, much more of a screaming buy, guys. And again, I know this video was a little all over the place, guys. If you're new here, I promise my other videos typically have, a little more structure, a little more cohesion. But, I wanted to show you guys live what kind of this game time decision looked like. I guess it wasn't glamorous, but, this is what it is. And thank you guys for tuning in. Feel free to hit that subscribe button, guys. I appreciate you all, and let's build wealth.